Great. Hi, everyone, and welcome to our latest INFUSE webinar with Send. My name is Molly Dobbins, and I'm a marketing specialist here, filling in for Tony at the moment. So I would like to introduce our panelists for today. We have Mark Varley, who is our CEO of Address Cloud. Mark, if you want to give a brief.
Yep. Okay. Good afternoon, everyone. I'm Mark from Address Cloud. I founded Address Cloud 9 years ago. We're a UK-based company providing underwriters with information to help with geocoding and with location intelligence. Prior to that, I worked for RSA for 8 years as a solutions architect, specializing in all things geographic risk.
Perfect. Well, welcome. We're happy to have you. I'd also like to introduce Carolyn Shreed, who's the Chief Underwriting Officer and Global Markets Division of Allied World. Carolyn, welcome.
Thank you very much. Very nice to be with you this afternoon. Carolyn Shreed. So I work as the CEO for Allied World, which means I oversee all the product lines that we have in the 8 branches we've got across Europe and Asia Pacific. This is now sadly my 25th year in insurance. I've always been on the underwriting side, and over my career I've probably underwritten most classes of business, but spent the predominant part being a property underwriter in both the Lloyd's and the company market. I also spent 10 years living and working in Singapore. We moved the family back to London in 2021, and I've been doing my current role since then. But nice to be with you.
Perfect. And last but not least, we have Derek Lynch, who is the Chief Underwriting Officer at Rethought Flood.
Thanks for having me, Molly. I've been on a couple different sides of insurance. I've been on the broker side. I've been on the underwriting side. Across all of it, I've always been interested in the tools we have and that become available and how we can use those to better understand risk and use that knowledge to help people. And I think right now, flood, which is all we do as a company, is one of the best opportunities in our lifetime to make that statement true. The things we'll talk about today, the tools we have, really are just creating an opportunity where we've always relied on public sector government options in the past.
Perfect. All right. I see we have Tony, who I'm going to add to the stage, who is usually our host, but I believe is having some technical difficulty. Let's see if he can join in or not.
Hello, everybody. Can you hear me?
We can.
Okay, excellent. My apologies. I'm having a few technical problems this morning, and having this afternoon, having some difficulties getting on. But hopefully, if you can hear me, that's all we need. You don't actually need to see me. If it gets difficult, I'll switch my video off, and we can just do it by sound. So I think Molly's probably had a chance to do some introductions for everybody. So hopefully you know who our panel is today. Our subject is about climate change in insurance, and how commercial underwriters can weather the storm. So we've got a great panel here. You've all had I think an opportunity to introduce yourself. Is that what's been happening while I've been away?
Yep.
Correct.
Perfect. That's great news. Thank you. So we've got people who know what they're talking about on this subject. So let's dive in with some questions that I've got for the panel. Starting with just a generic question here. What are the major challenges commercial lines underwriters should be thinking about when it comes to climate risk issues at the moment? Carolyn, can I start with you on that subject? What are the major issues and challenges?
All right. I could talk for hours on this topic, but I know we've only got half an hour, so I'll try and keep this succinct. And there's probably plenty of alternative views that the other panelists can talk about as well. For me, there are probably 2 sides to this conversation for underwriters. One of them is how you underwrite the original risk, and the second one is how do you make sure your firm is responding to the increasing regulatory scrutiny and all the disclosure requirements that are coming around climate and sustainability risk. For the purposes today, I guess I'll focus on the first part, which is looking at underwriting the original risk, given today's conversation. But I do think individual underwriters need to be aware of the wider picture and the regulatory and reporting requirements that are coming, because it's a huge challenge that their organisations are now grappling with, and the amount of data that's required is extensive for that. But from an underwriting perspective, we probably really talk about two distinct areas of climate risk, and that would be physical risk and transitional risk. So physical risk is probably the one that people would generally understand and know about, even if you're not familiar with the jargon. So it would refer to issues such as temperature changes, sea rises, droughts, and all the resultant extreme weather events that a changing environment brings. And all of those can result in huge, significant insured losses, particularly for first-party underwriters, so property, construction, etc. The challenges here are probably pretty obvious. How do you protect your portfolio and your clients against the increased severity and frequency of extreme weather events caused by climate change? And the other consideration for underwriters is that the direction and magnitude of climate change can be really slow, and in many cases really uncertain. And obviously there's no doubt really that the climate is changing, but a really complicated relationship exists between climate metrics and weather patterns in any particular area. And the conversation often focuses on the increasing risk, but I'd suggest it's likely that there are probably instances and geographies where the risk will decrease, and underwriters will need to be aware of that as well. So going back to the jargon, and the other risk that underwriters consider is the transitional risk. And this is related to efforts being made by governments and regulators across the globe who are trying to create policies aimed at reducing the impact of climate change and transitioning their economies to a low or net zero framework. So think about laws on carbon emissions that have come out, for example, or the now mandatory climate disclosure reporting that many regulators require. And these transition risks are generally new. Traditional insurance products tend to have gaps in coverage that ultimately are going to need to be either closed or protected against with new product development or revision to existing products. So, for example, in recent years, we've seen the development of carbon offset insurance or products around solar, wind energy that cater for a lack of wind or sun. And I suppose the third risk that I would encourage underwriters to consider is that's climate liability and litigation risk, which underwriters of third-party products such as D&O, PI, product liability probably increasingly need to consider and potentially price for. So liability risks associated with climate change are those arising from actions initiated by claimants that have suffered loss or damage due to climate change. And litigation cases against these issues have been steadily rising over the last few years. I think last time I looked at some numbers, there were over 2,000 live cases globally, ranging from individual losses to corporate losses and class actions. So it's a significantly, it's an area that's increasing in significance for underwriters. So I guess across the spectrum, there are considerations for underwriters at an individual account level and also at your portfolio level. Underwriters tend to focus generally on individual account review, which would include looking at how their own clients are responding to change. What does their risk management program look like? What do their asset profiles look like? How vulnerable are they to weather and climate events? But the portfolio level challenge is arguably going to become more important because that's where the systemic risk of climate change can materialise, and it affects more than one account in any single event. So then for underwriters, they need to start to consider issues such as diversification, both in terms of geography and in terms of asset mix. And it's also important that underwriters consider the impact of economic factors that can exist at a portfolio level. So inflationary impacts on property values, for example, economic growth in particular regions, population growth, are all key drivers to risks in the short term at a portfolio level. And similarly, the vulnerability or resilience of communities in specific areas or to specific perils can vary widely. And this has the potential to change as communities adapt and review their climate defences or create more robust building codes. So I think
that's quite a significant number of challenges that commercial lines underwriters are going to face up to. I mean, Derek, you see it from specifically from a flood and weather perspective. What's your thoughts on that?
Yeah, out of all those categories, the physical risk is definitely where I live out of all of that. And I'd say, not only do we have increasing issues with climate and weather and how the impacts in different areas are changing, but we also have issues with building where we shouldn't. We've historically done that. We continue to do that. We recognize areas we shouldn't build in, yet we get exceptions and carve outs and all kinds of things to continue that building. So I think the risk is getting worse, both from people putting themselves in harm's way as well as the risk increasing. The big storms, at least in the U.S., tend to get a lot of attention, hurricanes and whatnot, but roughly 3/4 of flood losses come from rainfall, heavy rainfall, and that can really be anywhere. 96% or 99% of counties between 1996 and then I think it was around 2017 or so have seen a major flood event. So it can happen everywhere. So we have the challenge of a shifting profile, people putting themselves in harm's way, and something that's catastrophic and can happen anywhere. So I think one of the biggest challenges that we kind of have is a little bit of apathy when it comes to some of these approaches, because we have insurers that absolutely care about their bottom line, but we also, when it comes to newer, better tools or a better understanding, if we've been profitable, there is a tendency to say what we're doing is good enough. And I think that we really need to focus on these new tools, and that's a big part of what we do, to refine our understanding and get better results.
That's really interesting, Derek. So a thought comes to my mind is, so when it comes to climate risk, are there different focuses for underwriters in different geographies? Mark, what are you seeing on that subject across the world?
Yeah, thanks, Tony. Yeah, we definitely do see differences. So us as we're a UK company, a little bit, I guess, a background to kind of when I started looking at this, like Carol and I've been, I think, 24, 25 years in insurance as well. And 20 years ago, when I was at RSA, us and actually most of the market in the UK were looking at postcode files. So we would, we're in the UK, we're quite lucky in that we've got quite a granular postcode system. So it's quite different from the US. It's typically down at kind of like a block, sort of city block level, maybe a slightly smaller, slightly bigger in rural areas, but in an urban area, then it's sort of street or city block level. And that was fine. But what we started to see is actually with the emergence of GIS and geographic tools and more detailed flood maps, in particular, flood being the kind of the peril that requires the most granularity, being able to take that down to a property level became a major differentiator for insurers in the UK. I mean, I think RSA were kind of pioneering. I sort of worked on that project. I think it was literally 20 years ago to the day we went live. And that's now quite commonplace in the market. We do still see some insurers, particularly in the commercial sector or where they're distributing through intermediaries, cover holders and managing agents, where they still apply their rules at postcode level. But certainly most of the big resi companies, resi insurers, and quite a lot of the commercial insurers, particularly those that we work with, will be underwriting at building level. But then we're in the process at the moment of expanding out internationally and starting to work in other areas. And actually, we see that the quality of data, the availability of geocoding, so the ability to be able to actually match the address and get that to the right point, is not kind of necessarily at the level we're at in the UK. I know the US, and I don't want to steal Derek's thunder. I'm sure he's got loads to say about this, but in the US, geocoding is quite a challenge. So in the US, there's no real kind of single source. There's not like a national mapping agency like we have in the UK with the Ordnance Survey. There isn't like a place you can go to and get a register of every address, every property, and it's physically surveyed rooftop location. So actually being able to perform that kind of analysis is quite a challenge, and there's a number of companies that have emerged to help with that. And then also the perils. So again, if you're in a country like the US or other places in the world, and APAC, and some of the areas where Carolyn used to underwrite and where she was, or still does, but used to live, some of these major events, actually, whether you're at that address or across the road, doesn't make a huge amount of difference if there's a big cyclone they're ripping through there. But if it is groundwater, if it's the kind of some of the surface water flooding that Derek alluded to, actually knowing, are you in the property that's kind of at the top of the hill or the bottom of the hill, that makes a huge amount of difference. So yeah, we definitely see differences in that focus for different geographies, but what we are seeing is people looking to and adopting building level where that's practical to do so.
And the world is becoming, I guess, more sophisticated as time goes by, and providing you with the ability to do that. Let me jump on to a slightly different subject, because I know that we're going to be talking about data when we work our way through this. So at what point in the underwriting and management process do you use data to do assessments? And if you're doing it in a different point in the process, what are the implications for those different strategies? Derek, what do you think about that?
Early and often. So, you know, that's one of the things that happens and has implications, especially when we're talking catastrophic events and climate impacted events here down the road. You know, it was a number of years ago now. I won't name the carrier, but there was, you know, a lot of talk around it. You know, some of the pulling out of wildfire in California, and you know what the story on the street at least was, you know, they insured a lot of homeowners, including wildfire. A consultant came in and said, you need to cut it by 20%. So did they do an assessment and say, what's the worst 20%? Let's get rid of them. No, they said, all right, let's distribute out 20% and get rid of 20%. So one of the issues there is when we're looking at these things that might require modeling to understand, you know, wildfire, that might be where the wind's typically going to be, how far the ember's going to travel, what does the vegetation look like. In flood, you know, you've got to do the catastrophe modeling, understand what that individual building looks like. Like Mark said, it's really very much building level. You can be flooded where your neighbor's fine. So if we do that early in the process, we underwrite at a building level, and we can roll that understanding up to a policy level. We can roll it up to a portfolio or program level. Then we understand what our risk is, our aggregation is, starting from each individual piece and building up. If instead we get just kind of a feeling with a few basic tools or a general risk score, and we start writing business, and then we go back later and we run a model portfolio, we do an assessment, we're going to probably find things we don't like. And we may find that because we're doing that assessment, or we may find that because the losses are not what we expected or what we thought we'd see. And when that happens, we have things where, you know, a market has a big shift. Post Ian, we had that in flood. There were a lot of markets that pulled out of geographies, eliminated entire products, or went up 4, 5, 8, 10 times on premium. So understanding what that risk is by using that data upfront, early and often, is absolutely what we need to do when we're talking about climate related risks.
So if I can maybe summarize that using the words of Francis Bacon, knowledge is power and early knowledge is more power.
Absolutely.
Okay, fine. Well, thank you very much, Derek. I'm going to turn now to the way that insurers are working at the moment, the services they provide. And maybe, Carolyn, if I can direct this question to you. How are insurers moving beyond their traditional risk transfers services to offer sort of proactive, data-driven advice to their clients to, you know, do exactly what Derek was talking about there: know early, understand early, and have the insurer understand early exactly what the risk is all about, and help to avoid some of these issues?
Yeah, thanks, Tony. So I guess to a degree, there's probably about maybe 3 areas where insurers can kind of move away from that traditional capacity provider role to support clients with their climate change strategies. And I'd probably put them into 3 buckets. One of those is at the risk assessment stage. One of them is resilience, and the other one is in the recovery. So I guess taking it in order. So from a risk assessment perspective, most organisations need to map their kind of risk profile and their appetite and the kind of relevance of insurance as a mitigation tool. And that's quite a complex exercise for most businesses. And the analysis is going to require input from their own organisation, risk managers, insurance brokers and legal advisors in some cases. But I think insurers have a really important role to play here too. And I think it's important that companies consider not only their own businesses and their resilience to climate change, but also critically the ability for their supply chain and subsidiaries to how they would respond. And then I think once you've mapped that out, how resilient a customer is and how they can create resilience to climate change. Underwriters have a really important role to play here too, in terms of getting clients to implement best practices around managing their assets for extreme weather risks. And I think probably for most clients, there's an expectation that insurers' roles extends beyond that traditional role of just providing insurance in that space. And that's partly because insurers are in a unique position of having data and insights across numerous jurisdictions, geographies, industries. And for us, distilling what that information tells you about how certain assets are going to perform in the face of extreme weather events, and feeding that back to our clients is not only adding value to the clients, but also potentially improving their risk profiles. And ultimately, that's going to be a benefit to all parties. And I think really in that vein, it's not really just restricted to the corporate end of the customer spectrum either. To a degree, the kind of SME consumer market is arguably the most appreciative of that type of risk management advice that insurers can provide, because often those organisations are too small to have that kind of functionality in-house. And in fact, in the case of consumers, this probably doesn't even exist at all. So, for insurers to be advising on retrofitting solutions that could, help mitigate some of the inherent risks can be completely invaluable to those customers. And the final point that I'd make, where I think insurers have a role to play here, is it's inevitable that we're going to face these sizable losses from climate change. And where damage can't be avoided and we do face those losses, I think insurers are absolutely critical to helping businesses and communities recover from those shocks and disasters, and hopefully help them to rebuild stronger than before. So that post-event recovery assistance is vital, because at the end of the day, insurance is really just a promise to pay when the worst happens, and our industry needs to be there to help our client bases in those circumstances. And obviously, with the increasing severity and frequency of losses from climate-related issues, that responsiveness and the support that insurers provide in those circumstances is going to become even more vital.
I think that's a really important point, Karen. Building back stronger as climate change becomes not a black swan event anymore, and it is happening more regularly. And I guess, Derek, you're seeing that in the US. Building back stronger is going to be a really important part of what you're doing.
Yeah, when we see a hurricane come through, just because that's a big flashy example, you can see the difference in building codes. If you have an area of a neighborhood that was built recently or rebuilt, and you have an area that was built, 30, 40, 50 years ago, you can just see them and pick out, the building times that when they were built based on the building codes and the impact from the wind, the water, and all the rest. So building back better absolutely makes a difference.
Yeah. Okay. So if that's all going to happen and insurers are going to move into providing those kinds of services, what sort of data and new approaches do we think that underwriters need in order to provide those kinds of services to their clients? Mark, what do you think about that?
Yeah, thanks, Tony. So so I've got some real life examples of this as well that just elaborates on what Carolyn and Derek were mentioning there. So yeah, we provide property attributes to Allied World, to Carolyn's team, and to other clients as well. And that's really around kind of gathering together the best in class property characteristics. So what information can we find? There's great sources out there. We work with the NHBC in the UK, who provide warranties on about 80% of the market. They're a kind of arm's length government body providing warranties. They've got a really fantastic rich set of data which we use, and then we provide that to our insurance customers on construction and different kind of how the building's been built. And then combining that with the climate risk indicators with detailed mapping can give really valuable insight to insurers, which they can then pass on to their customers. And again, for them to be able to be in that place to be able to provide that advisory capacity, they need to be really confident in the data that they're getting, that it is of high quality and it is accurate and at the right level. And then just a concrete example, we talked about kind of building back better in the UK. Flood Re, who are a customer of ours, they provide reinsurance to the residential property market in the UK to allow insurers to be able to take on the kind of risks and the kind of properties that historically would not get, would really struggle to get insurance. Now, Flood Re needs to basically cease to exist by 2039. That's in their kind of mandate. That's in they have to make themselves and put themselves out of business, which is kind of an interesting approach. One way that they're hoping to do that, and a key part of the scheme, is their Build Back Better scheme, and that's all around offering and working with their insurance partners to be able to, when a homeowner has a claim, rather than just like paying the claim and then that's it, and then a few years later it happens again and paying it again, they're giving an additional sum of money to be able to make resilient repairs. That will be things like raising the plug sockets up, doing things like installing non-returnable valves on the plumbing, some things that tiles instead of carpet. So some of those things to make, quite small improvements that don't cost a huge amount of money, but they can significantly reduce the impact of a flood when it happens. So yeah, I think that's a fantastic example. And again, that's all powered by high quality building level data.
I think
we've managed to move Tony, haven't we? So I think I know what the next question to us was going to be, because I think we've only got about 2 minutes left. And he was going to say, what's the one thing you're going to advise our audience members to remember from this session? And what can they do in their daily work? So I'll go first, because I've asked a question effectively to myself. But for me, I guess my advice, particularly to the underwriting community, is it's never been more relevant that underwriting is an art and not a science. And data gives you one part of the story, but it's what you do with it that really counts. And I'll pass it over to you guys to finish it off.
Go ahead, Mark.
Oh, thanks very much. I'm going to be cheeky and get 2 in. I've got 30 seconds for each one, Derek, so I won't steal your thunder. So my 2 things really are you working at the correct level of resolution for the peril that you're writing? So, if it's wildfire and you're working at a city block level, that's way too coarse. You need to be working at the property level. But then there are other perils. Actually, you might be fooling yourself into a unrealistic expectation of accuracy, depending on what you're writing. And the second thing is really have a look at your geocoding. So are you confident that your geocoding? Have you got the dots in the right place? Just because Google tells you it's at rooftop level doesn't mean it's the right rooftop. So I definitely encourage anyone to go in there, run some spot checks, have a look at the results you're getting back. Don't just trust the labels. Have a look at the actual things. Look at them on a map. Are they in the right place? And if they're not, do something about it.
Yeah, before I give my answer, I'm just gonna say a here on that. I know Tony doesn't want too many just.
Yeah, we're supposed to not agree with one another, aren't we?
But I've got my.
So we can give ourselves a pass.
This is more of just an example as opposed to a statement of agreement. But I've seen even working with large, robust insurers, they often rely on what you call a bulk geocoder, which, as you said, can put the dots on a street, down a street, sometimes in the middle of a zip code or a state. It'll give you a confidence, but those are often ignored. And the results mean nothing when you're talking about a granular peril at that point. So you do everything else perfectly and do that wrong, it doesn't matter. For my end, I'd say education is the biggest thing. That's, we need to stay educated and aware of the tools that exist and how best to use them. We need to help educate the brokers we work with and the insurers we work with, especially in flood. A large number of insureds, study after study, say they believe they have flood insurance when they don't. They don't understand the risk. Depending what number you look at, whether it's claims from FEMA, 25+% in low risk zones, or Congressional Budget Office in the U.S., 40 to 50% of losses in low risk zones, or recently looking at Hurricane Debbie, where 3/4 in low risk zones. But people believe, if the mortgage company doesn't tell them they have to have that coverage, if they're in an X zone, they don't have any risk. So education on people's hazard, their risk, and the tools we can use to assess that is really the key to me that we can do. Understanding those things and disseminating that information so that we can all make good decisions.
Remember.
So I don't know, Molly, if you want to do a wrap up, or Tony, if there we go.
Okay, I'll wrap up. Look, first of all, I want to say to everybody, my apologies for all the technical difficulties at my end. I don't quite know what's been going on, but my apologies for not being at the beginning and not being there towards the end. But we've nevertheless, we've had a really interesting conversation on this subject. So I'd like to thank the panel for some excellent insight into the question that we've been debating. I know that we've got a really interested audience, because there's been a whole series of questions coming through, but we just haven't had a chance to take the audience questions today. But we've certainly covered a lot of ground in the subject of climate. For those of you who are going to be attending our next seminar, it's going to be webinar. It's going to be on the 9th of October. The subject is going to be cyber security underwriting. What's next after all of the cyber attacks? It just really leaves me to say thank you very much to our panel for preparing your excellent answers on all the questions we've been putting to you today. And I hope it's been useful for the audience and educational as well as entertaining to learn something more about the question of climate change and commercial lines underwriting. So thank you, everybody, and goodbye.
Thanks, Tony. Cheers, guys.
Thank you.
Bye, everybody.